and welcome to a fresh episode of Legal Wrangle on indirect taxation. In this episode, we are presenting before you cases relating to taxability of trading activity and tax on bank charges and trade margins. In the field of service tax and cases relating to refund of duty paid on cement and steel used for constructing houses for tsunami-affected persons. Regarding VAT and customs, we are covering issues relating to classification of a beverage, Appy Fizz, as aerated drinks or fruit juice and relating to the constitutional validity of Section 129E of Customs Act 1962. Today we start with a CESTAT decision, wherein the key issue arising in this case was whether difference between the sale price and the purchase price could be taxed as consideration under the heading Business Auxiliary Services. Now let's go to Anuj for details of the case.
The assessee firm undertook export of goods procured from domestic clients against advance payments as per the agreements, and the various components of the sale value recovered as trade margin, that is, the difference between the sale price and the purchase price, were sought to be taxed as consideration for providing of business auxiliary services taxable under Section 65(105) ZZB of the Finance Act 1994.
The CESTAT held that from the investigations, it was apparent that the assessee deducted service charges at the rate of 2% on exports, bank charges and trade margins, etc. So, if the transactions were one-off trading, the assessee could have treated the sale value of goods as receipts from which expenditures were to be deducted instead of treating them as receipts. Taken in conjunction with the admitted fact that the assessee did not at any stage become the owner of the goods, there could be no doubt that the said income was not trading profit but was consideration for some specific services rendered by the assessee. Hence, the tribunal found no merit in the appeal and dismissed them. In our second case, the key issue is whether a pre-deposit for filing an appeal before the appellate tribunal or commissioner appeals mandatorily had to be made as prescribed under amended Section 129E of the Customs Act 1962. Now let's go to Anuj for the details of the case.
The petitioner firm was engaged in the import and export of goods. A search at the premises of their firm revealed that some dubious invoices, which were found to be parallel invoices used for various exports. Further scrutiny revealed that in 29 cases, one invoice indicated actual contract value and the others indicated a higher value, which were used for availing undue duty drawbacks. Statements of the petitioners were taken admitting the same. Subsequently, the goods in 63 consignments were confiscated, apart from imposition of duty demand with penalty for intentional misdeclaration. The petitioner in appeal challenged the constitutional validity of Section 129E of the Act.
The dispute was settled by High Court when it considered the intention of the Parliament in amending Section 129E. Prior to the amendment, in view of the powers and discretion conferred with the appellate authority to waive with the pre-deposit, substantial time was consumed in adjudication of such applications and in deciding issues, such as to whether any undue hardship was being caused and could be accepted to grant an appropriate waiver. Hence, orders on the stay applications caused further litigation, thereby eating valuable time of the tribunal and delaying the adjudication of appeals. This undoubtedly caused a serious prejudice to the parties before the tribunal.
Considering these hard realities and to ensure the expeditious disposal of the statutory appeals, the Parliament in all its wisdom amended the provisions of Section 129E by providing for a pre-deposit of 7.5% and 10% respectively. Given such aim and insight behind the provision, it certainly cannot be held to be unreasonable, onerous, unfair or discriminatory for two reasons. Firstly, that the object of a public policy sought to be achieved by the amendment, that is, the speedy disposal of the appeals before the appellate authorities, was a laudable object and could not be overlooked so as to label the provision as unreasonable or onerous or violative of Article 14 of the Constitution. And secondly, the amount required to be pre-deposited was not unreasonable from what the earlier regime provided.
Our next case deals with an interesting issue relating to refund of duty paid on cement steel used for constructing houses for tsunami-affected persons. The assessee in instant case is Church's auxiliary for social action. Now let's go to Anuj for details of the case.
The assessee submitted that lower authorities have restricted the refund claimed by the assessee to the extent of duty paid on cement and steel utilized in construction of houses which were affected by a tsunami. The assessee submits that as per clause 3D of notification number 32 of 2005 as amended, wire refund ought to have been sanctioned at the rate of 6% of the cost of construction of such like houses, subject to a maximum of Rs 9,000 per house.
The court views that if opening part of notification is read along with clause 5, only conclusion one could reach is that the entire object and purpose of notification was to reimburse the whole of duty in respect of cement and steel, which was used in construction of tsunami-affected houses or temporary shelters. It does not appear to be the purpose of notification that irrespective of amount forked out by assessee by the way of duty paid on cement and steel, it could be entitled to claim refund at rate of 6% of the cost of construction, subject to a maximum of Rs 9,000 per house, whichever is less. Therefore, questions of law have to be answered in favor of revenue and against the assessee. In this case, the key issue is whether the observation that period of limitation would commence from date when order was dictated in court is erroneous to law. The assessee in this case is Mrs. Ramco Cements Limited. Now let's go to Anuj for the details of the case.
The assessee in the present case had claimed MOTVAT credit in respect of goods and the period in issue was between April to May 1997. The tribunal accepted the assessee's claim for MOTVAT credit in respect of the first 6 items, while denying its claim with respect to one item, that is steel wire. The assessee then carried the matter to the Supreme Court and having obtained a favourable judgment from the Supreme Court, which according to it also dealt with the goods in issue, that is steel wires, moved a rectification application before the tribunal. Even though the judgment of the Supreme Court evidently was brought to the notice of the tribunal, it dismissed the rectification application vide its order dated 22nd of December 2006.
Having noticed the observations made by tribunal in its order dated 22nd December 2016, court would omit its duty if it fails to observe that tribunal has misdirected itself in law in recording that period of limitation would commence from the date when order was dictated in court and not from the date when it was signed. According to court, period of limitation cannot but commence from the date when the order was signed and thereafter upon its receipt by assessee. The observations made by tribunal are erroneous in law. In our next case, the key issue before court is whether trading activity can be categorized as an exempted services for purpose of invoking Rule 6 of CENVAT Credit Rules 2002 prior to 1st April 2011. The assessee involved here is Mrs. Ruchika Global Interlinks. Let's go to Anuj for details of the case.
The assessee firm was engaged in trading activities as well as in commission business and bought and sold articles from Messrs. Essar Steels Limited. In its capacity as a commission agent, the assessee sold HBI fines, which emerges as a byproduct in the process of manufacturing the steel, to various parties on behalf of Messrs. Essar Steels Limited. The audit revealed that the assessee had been claiming credit of service tax on various common input services like telephone services, maintenance and repair services, which were used not only for its trading activity but also qua its business of commission agent. The tribunal, with regard to this aspect concerning irregular availment of CENVAT credit, which was purportedly not used for the output services, sustained the view taken by the Commissioner Appeals and thus, in effect, held that the assessee was eligible for input credit. However, insofar as other aspects of the matter are concerned, which is excess utilization of CENVAT credit for exempted service, the tribunal ruled against the assessee. Accordingly, the tribunal partly allowed the appeal of revenue by interfering with the order of the Commissioner Appeals, insofar as purported irregular availment of CENVAT credit for output services was concerned.
During the period in issue, which is 2006 to 7 and 2007 to 8, trading activity carried out by SSE was not amenable to service tax. The amendment to Rule 2E only stated the obvious that there was no liability to pay service tax of trading activity during relevant period. If the SSE has accepted before court that he was not paying service tax on an activity, then the credit of services vis-a-vis input services could not be taken on a pro rata basis as per the formula stipulated in Rule 6.3c, as it then obtained at relevant point in time. Since trading activity was not amenable to service tax at relevant period, surely the apportionment as provided in Rule 6.3c would be triggered. Having regard to rule position and given the admitted fact that no separate accounts were maintained by SSE with regard to taxable and non-taxable services, Clause C of Rule 6.3 of 2004 rules would apply. Accordingly, questions of law answered in favor of revenue and against the SSE. Well, this brings us to the end of this episode of Legal Wrangle on indirect taxation. You may write to us your comments, criticism and counsel at editor@tioltube.com. Please do subscribe to the TIOL Tube channel on YouTube. It's free and will keep you updated on our new posts. Have a good day.